Today we have Ryan Gibson from Spartan Investment Group with us here from Seattle, and I am extremely excited to have him here with us today because he's doing something that most people didn't even think was possible. So I'm excited to have Ryan with us today. Ryan, thanks for joining us.
Ian, thanks so much for having me.
So today, one of the things that you really captured my attention actually was a LinkedIn post, I don't know, probably 4 months ago, where you were announcing that you were breaking ground on a 217 lot mobile or manufactured housing community. We'll say when it's brand new, that's manufactured housing, baby.
Right.
That's
Oh yeah.
that's not the other terms. That's the manufactured housing community. And it really piqued my interest because just all the kind of interactions I've had with counties within the portfolio that we own, it's been very off limits. It's been a non-starter. You can't even start the conversation. So I'd love to hear, our listeners would love to hear just kind of like maybe just the basics of just how the deal process kind of came about. Is this something where you had to convince the city? Was this already in place? And then maybe how you kind of found the deal, and just we'll start from there.
Well, isn't it interesting to first talk about the housing crisis that we have in the United States, and the politicians talk about it in their debates, but the counties actually don't do anything about it.
It's fascinating.
You know, when we stumbled upon this deal, I had to. It was kind of a joint partnership with a family that lives out in the Pacific Northwest that we're good friends with, and they actually helped us implement some propane distribution businesses at our RV parks. And what was interesting was they brought up this opportunity that was matter of right, and that they were going to get binding site plan approval to get this project approved. And I didn't believe it. And I was so overjoyed to go to the meeting with Sequim, Washington, out on the Olympic Peninsula, and sit down with the city planning and hear them express their delight for this project. Wow. Because we have an affordable housing crisis. And the fact that there are so many unwilling jurisdictions to allow these types of developments is just disheartening. I'm a personal believer that in order to create affordable housing, you actually have to build luxury housing, because any housing that enters the market has to be, it's all pushed down, right? If you enter a bunch of brand new condos into a market, you're dumping inventory into a market. You will then, your A class becomes your B class becomes your C class. Everything comes more affordable because you eventually have more supply, and the supply is higher quality. But to be able to come into a market at an affordable level that's luxurious is an amazing opportunity that we couldn't say no to. So as self-storage developers and RV park operators, we're not in the mobile home park space, but just, creating your why is really easy in this, because we're delivering homes for $200,000 that are brand new, HUD standard, right off the line, pit set, double wide, 3-bedroom, 2-bathroom, paved driveway, 2-car garage, off-street parking, curb, sidewalk, gutter, city sewer, city water, set in the shadow of the Olympic Mountains, a stone's throw from Olympic National Park, in a community that has casinos, a beautiful Dungeness spit. I think we're Facebook friends. You probably saw my picture of my daughter looking out over the Dungeness spit. Beautiful area. And to give this opportunity to the community to live this way for $200,000 or less on a brand new home that they own. I mean, it's personal property, and they still owe rent, but no property taxes because it's personal property. And to be within 2 hours of Seattle, Washington is amazing. And it's just, it's so nice to be part of a syndication and part of a development and a project that provides that to the community at affordable price.
Yeah, I can't agree with you more. It's one of the best parts of the business that I find is vacant pads, because then when you're bringing homes on there, you're adding to the affordable housing stock. You're able to do it in a very, very large way, which must be extremely satisfying. I guess so. This deal was already well in process in terms of like the entitlements and zoning. You didn't have to, I guess, convince the city to kind of accept this. Is that correct?
Yeah, this is a rare project. It was 38 acres in the city of Sequim, and flat parcel, less than 1% grade, south to north, and the grade was in the direction of where the sewer connection is. So just it's graded in the right way.
Yep.
The site's got great infiltration. It was formerly a dairy farm since the 1940s, and it's really just a really nice piece of dirt. And walking distance to churches, cafes, fitness centers, the downtown, really cute town if you've ever been out there. Fun fact: Sequim is where Joe Rance is from, the 1936 Olympian from the book The Boys in the Boat. So for those that have read that book, that's where he hails from. It used to be an old logging town, and the cool thing about it is in Washington it rains all the time, especially Seattle. But in Sequim, it's got the magical rain shadow, so it's protected from a lot of the rain, so it gets less than 16 inches of rain per year. So we've actually made it affordable senior living. So it's going to be a 55 and up park, and it's the perfect destination for baby boomers that want to be in a beautiful area but have an affordable housing. But as far as the zoning goes, it was zoned correctly, but it does not mean that there wasn't a fight, because politicians don't want to see affordable housing come to their market. Everybody talks about affordable housing, but there's politics. It's a great buzzword. It's great to talk about, but when it actually comes down to somebody who's willing to get Main Street investors that invest in a Main Street project and deliver a high quality affordable housing, there's a lot of politicians that are absolutely 100% against it.
And can you talk to us a little bit about that dynamic there? Like, so
sure.
Obviously what you found sounds like somewhat of a unicorn, just in terms of having the things already, the zoning already in place. Not to say, did you have to go through city council to like get the plan approved? Okay. And so kind of talk through like that, like what was the sales process? Cause you had to do something to say, okay, some people are against me here. How can I win you over?
Yeah. So the entitlement process, that we were not really involved in the entitlement process. We have taken other projects, very difficult projects, through challenging entitlement projects. We've done everything from move wetlands to having projects that have DOE and tribal, correspondence to get approved, and multiple easements. We've built in high density areas like Washington D.C. But really, the process here was you have to get binding site plan approval, and that has to go through the planning department at the city. So they have to kind of buy into your project. You have to have a complete application. You have to get binding site plan approval. And then that goes for review and consideration of the planning committee, board of kind of like the board of county commissioners or the board of planning for the city. And the city rep that's sort of escorting this project through the things has a recommendation. So he made a recommendation to the planning division, and they had to vote on it. And they voted to pass it, barely.
Wow.
And then after that process, it went to city council. And city council, and this is all public information. If you Google Lavender Meadows Park, you can actually read tons of articles about it. There was quite a lot of noise that was made to get this done.
Right.
And Lavender Meadows Park was first put in front of the council members, and there was a tie. And a tie is a denial. And the reason why the council, 3 of the council voted no, 3 of the council voted yes. The reason why the 3 voted no was because they had a misinterpretation of the code that said you couldn't put private streets in a mobile home park or a manufactured housing development. And there was confusion, fair, but the code clearly allowed for private streets to be put into a public housing development. And
so their argument was that since you're putting in private streets, that it goes against the code, when at that point we have to deny. Seems bizarre.
Yeah, and the city's attorney was actually like, it doesn't say that in the law, and so I won't get into the
Yeah.
details, but let's just say there was some very um, good conversations about what our next steps were going to be if they weren't going to follow their own code.
Got it.
Um,
I guess,
so
does your background as a developer kind of help you through this process? I feel like someone,
absolutely, yeah,
coming from like I'm coming from the acquisition world, and I don't deal with any of this, right? Like
yeah. I
I don't
think
interact with city council. Like how, I guess, what skill set within that developer skill set that you guys have done over and over has helped you kind of get this across the finish line?
so. I used to work. So I'm a former airline pilot. Well, I still fly, but not as nearly as much as I used to. But I used to work for the FAA, and I used to not for the FAA, but as a consultant. And so I used to do a lot of consulting work, and I was very heavily involved in regulatory affairs.
Got it.
And I think that helps. Scott Lewis, my business partner, he was involved heavily in the government. He worked for the VA, and we were in that DC background. And I think two things about DC helped prepare us for navigating through difficult zoning. We worked in DC and worked within governments, so we know kind of how the bureaucrat thinks.
Yep.
The other thing that we got an edge on is we developed in DC. And for anybody listening, is they're nodding their heads right now. If they build homes in DC or do things in DC, they know that not only is it not by the book, but it's the Wild West.
Wow.
And it is very difficult for somebody to go into the housing department and do the right thing and come out with a permit in a reasonable amount of time. No offense to those in DC if you're listening to this, but it is not for the faint of heart. It's very difficult to get permits. It's very difficult to build housing. And again, I don't mean to go on rants about affordable housing, but you wonder why it's so difficult to add housing units to metro areas. And you
It's
really look at your own government for taking years to approve the development of additional housing units, which would bring down the cost of housing. And everybody talks about it, but there's all these filters and frictions preventing developers from putting in additional units, which causes an affordability crisis because there's a limited supply. And I know nobody wants this stuff in their backyard, and I get that. But Sequim was very open to that. And while we weren't really at the forefront of the entitlement process, we were very engaged in the process throughout. Thankfully, I was kind of got a front row to the show. We had another development group kind of working on it, so it was kind of fun to kind of watch them do it because it was I've been in their shoes, so I've rezoned properties and had neighbors come out and yell and scream, and I've done challenging public hearings as a developer. But really, that's what makes us different, I think, is the fact that we've had so much development experience on the entitlement side of the business.
I was gonna say very quickly early on, I was like, it almost seems like a select few groups could actually pull this off, especially within the space, because you have that breadth of experience that someone coming into would stumble through a lot of mistakes and might not even be getting it off the ground, just because, it
Well,
sounds like there's a lot of nuance there.
if you're a wholesaler, you're looking for that quick sale,
Yeah,
right? Development is a long game.
it's true.
It's 4 to 5 years, and there's a big
Okay.
payday, but you've got to know, like, you've got to have that, like, you're not closing that deal for a while, and you're not going to get what truly makes the value in the property happen for a long time.
So yeah,
So
let's talk a little bit, maybe let's shift over a little bit more towards the kind of the actual development and maybe financial aspect of it.
sure,
Interested to hear a little bit just kind of how that works. So how long did you have the property under contract before you even, I
at
guess,
least
got
a year.
approval?
It was
Okay.
about a year. Yeah.
And then when will it deliver? Like, so you had it under a year, and I guess you announced
Next
4 months
summer.
ago. Next summer you'll be fully.
Yeah, built out and open. Yep.
Wow, that's
So yeah,
really
we've already
fast.
started. We've already started demoing. We had some asbestos removal that we had to do at the existing. There was 5 building structures, 4 houses, and in a barn, and we had to do our asbestos and then get that removed. Then we demoed those properties, I think, a couple days ago, and then we're going to start mass grade at the end of the month. So we'll start the mass grading. There's an irrigation channel on the property. We have to relocate that. Some fencing. We'll start doing some. The fun part about this project is you're branding it. So you're creating a. We've had to create we brought on a branding company to develop the sort of the dream for the park. Website, video, a bunch of outward facing stuff that we'll be delivering in the next couple of months. So we had to kind of build a vision for. Because we're attracting tenants from around the country, really, yeah.
Yeah, I was going to say, from a marketing perspective, within an existing mobile home park, manufactured housing community, when you already have people paying lot rent and you might have a vacancy or two, a website really, I found, hasn't been that useful. But when you're trying to fill 217 homes and kind of this is going to be a 5-star asset. It sounds like
it's world class.
Yeah. Like in terms of
it'll
what
have a
you're
clubhouse.
creating.
Yeah, it'll have a clubhouse, beautiful monument sign. We've actually saved all the barn wood that came off the barn. We're going to repurpose that into signage around the property to keep that theme.
Mm-hmm.
We have a clubhouse, nice polished concrete floor, good community center for the residents. There's numerous pocket parks.
I noticed that in your design, you have the community center, but you have multiple parks throughout the community that, people can enjoy, which is really cool. My parents actually have that in their neighborhood where they live in Charleston. And it's such a nice feature.
And the pit set homes on a kind of quasi foundation. It looks like a house. These are Palm Harbor, right off the line, homes. And, in this community, there's some other newer communities, and they're you can't even tell they're manufactured homes. They're not, single wide, skirted, up on blocks, tilt over shed, gravel driveway, right? It looks like a home, and it's affordable. And what's nice about it is, if you're a spec developer, you've got a vertical, 217 homes and deal with L&I and deal with all the building departments and all that. We are handling the entire thing. So we are the dealership.
Okay.
We are the sales force.
Okay.
We are the contractor within the partnership. We're doing our own development. We're the syndicator. We're the operator. We're the whole.
Wow, you're the whole shebang.
The whole shebang. So you show up to our property. We will have partner banks to do financing. To kind of push. Not push people, but just to, hey, if you want financing, here's a list of a million banks that will do this.
Okay, so given the quality of homes, you're able to sell these loans off, I guess, to these banks. That frees you up capital to kind of continue to develop the project, or is that, so you're not holding the paper to this, right? The
capital structures, we bought the land free and clear.
Okay.
That's what the syndication went to. And then we raised an additional $1 million or so to do other things like marketing and project fees and things like that. And then we're gonna get the loan is covering the development. So the loan is the mass grade, the infrastructure, utilities, the offsite improvements, all the things that go into building the park. Right. And then the loan, then we lease up the property. So we sell the home, they're all owner occupied homes. They're all brand new homes. It's restricted to 55 and up. Yep. And then, then we charge them the lot rent. And, once we lease up and stabilize the property, that's where we really create the value.
Are you looking to sell this long-term, or you plan to hold it?
So that's an interesting question. So we're actually selling it so Spartan is, we're a syndication company. So when we bring on investors, there's a bookend to your return. So, we say, hey, your money comes in, your money comes out. Here's your projection. This is how long it's going to be. And then we are also attracting a certain risk profile of investor, right? If you're investing in ground up development, you have to expect,
size returns, right?
Pretty sizable returns for the risk that you're taking on. And then once it falls off to a stabilized asset, your risk goes way down, and obviously your risk profile goes down. So those yield chaser investors, sorry for that kind of.
No, I understand where you're getting at. Yeah.
But yeah, if you're going in you're going after a bigger yield. If you're buying a stabilized Class A, mobile home park in a nice community that's fully occupied, right. You're not going to get as good as returns, but you're also not taking on the risk. So you're, there's two risk profiles. So we're selling the our stake in the partnership and our investor stake in the partnership to the family that is in the deal with us.
Oh, interesting.
Yeah.
Okay.
So we've structured the partnership that way. We have
Is it
had
the
some
one who brought
offers.
you the land, right? They brought you the opportunity to develop this.
Mm-hmm. And
Got
they
it.
wanted to partner with a company like Spartan that could handle the project management, operations, capital, the whole, we do the whole thing. We operate all of our own properties. We develop our properties, the whole financial modeling, underwriting, deal structure, that's what our main role was. We've never done a JV with anybody. This was kind of our first one.
But it was kind of contingent on getting the deal, and it made so much sense financially that you said this is, something worth pursuing,
Yeah.
especially within the manufactured housing space, just because, as you
Yeah.
said, the amount of these deals. How many deals do you think are going on like this, like ground up development, not expansion of parks, but like real ground up? What do you think?
Right now in the United States,
Yeah.
less than 10.
Yep. That sounds, I'm not surprised.
Yeah, I would
see very
probably
few.
say there's maybe less than 6 right now of this size and scope from the ground up and this quality. I'm sure people are adding on units here and there, but there's not anything like this. There probably hasn't been a park built in Washington, the state of Washington, in over 25 years.
And you mentioned that now that this is being built, the code has changed, or I guess there's been a change within the city.
So the moratorium on building mobile home parks in Sequim until they figure out this private street issue.
Wow.
Which could go on for years. But now there's a moratorium. So sorry if you're listening to this and you thought you're looking at Sequim, don't bother.
Hey, it's even more. Hey, more insulation for you. Turns your lease off, makes it only more attractive. So let's dig a little deeper into the actual development aspect. How do you break down the cost per pad,
Yeah. So everybody asks what the cost per pad is. So we've built RV pads, which you might, well, it's different. Yep. But an RV pad is pretty similar. There's a pedestal, there's a sewer connection or some kind of septic connection, and then there's water, and then there's some grading. So it really depends on what you're doing. So in this case, our cost per pad to develop is somewhere between $35,000 and $40,000.
Okay.
And that includes the cost of grading the site, utility connections.
So utilities here are city
everything. Yep.
Okay.
So tap fees are about $20,000
for the entire community, or per
pad.
Per pad. I was gonna say that sounds really cheap.
Pad.
I was gonna say
yeah.
I was like, I just hooked in 10 lots for $75,000.
Yeah. $20,000 a pad. So the way we're doing that is we're baking that into the cost of the home. So when you come in and you pay $200,000, you're getting a top of the line home with a lot of options, delivered, pit set, landscaped, driveway.
It's there. It's move-in ready.
It's move-in ready, and it's all tapped out too. So you take the tap fees out, that's $180,000. You take the pit setting in, it's another $10,000, right? So I mean, you can do it backwards. I know there's homes out there you can buy for $80,000, $100,000, whatever. But by the time you do everything, pay the real estate commissions, all that stuff, $200,000 all day long.
Does that include, so that 40, 30, 45, does that include the price of the land as well? Or just
the rough cost of grading the site. Yep.
That doesn't include development, kind of getting it to the point where you can actually go through with that, right?
Yeah.
So your all-in basis would probably
I think our all-in is $55 a pad.
Okay.
So, but parks are trading out here for $120,000 a pad plus.
Really? And so what will lot rent be in this community once it's
$575?
$575. Okay.
Yeah. So it's about for those, I'll save you the mental math. It's going to trade between a 5 and a 6 cap stabilized. And it is I think it was 1.5 or 1.4 million NOI, something like, I should probably look at it, but somewhere between 22 and $25 million valuation.
Wow. I mean, but to be honest, what we're seeing, at least through this pandemic, is collections have never been stronger for us. I mean, and so it's a lot of other people have seen that as well.
So just imagine you can live in a seaside town with mountain views everything, Costco, Walmart, cafes, shops, bars, all that
Yep.
stuff, walking distance, and you're a baby boomer and you're retiring and you've got, hundreds of thousands of dollars socked away, maybe a little bit less, and you can live in this community where homes are $400,000 straight away, and you can come in for 200,000. Normally
And
these
live an
types of,
amazing life, and not even,
yeah,
it's just not even the surrounding area. The community itself is a massive asset to this city,
yeah,
right?
yeah,
It's not like, oh, I live in a trailer park and this is around. It's like I live
no,
in a beautiful community
correct.
as well. I have amazing amenities around me, which, I mean, the value proposition is so out the roof. I mean, I'm such a
Yeah,
large proponent of manufactured housing. It's not even funny. And it just makes so much sense, especially for the location of where this is.
absolutely. And I think that's why, you look at Washington, and for those from the area are familiar with Washington, there's this place called Suncadia. And it's this dream. It's this beautiful community. And there's on golf courses, we have golf
Hmm.
courses, in Swim. There's clubhouse, there's things to do, there's pools. I mean, we don't have like the infinity pool in the workout room and stuff like that. But the idea is that it's in a beautiful area that gets a lot of sunshine. But I mean, those homes are $1 million. I
Right.
mean, $750,000. I mean, they aren't manufactured homes, but a condo is 350,000 in that community.
Mm.
And
Which
people,
doesn't
trust
work
me, it's
for
a,
retirees. Well, I mean, it's much nicer to
yeah.
have a one level home instead of having to
Oh
climb up and
yeah.
down stairs and
Yeah.
elevators, and especially in a pandemic, an elevator is not, it's not an asset anymore. And it's kind of something to
Well,
take into consideration. Manufactured housing is great for the current condition we live in.
yeah. And when we were going through the entitlement process, you got to sell them on this stuff.
Yeah.
One of the things we had, I can't remember the metrics, but we had a minimum lot utilization for this. This was high density zoning. So the previous proposal for this land was like triplexes and quads and things like that. High density zoning.
Hmm.
Kind of ugly.
Yeah.
Frankly. Um, in this instance, people are getting a full lot with a yard and a garage, and I mean,
What size are
and
lots here?
about 4,000, or I think they're like 3,800 square feet.
Okay.
Yeah, so they're big lots. I
Yeah.
mean, for mobile homes,
Right.
and you get a little yard and everything. So that was kind of our advocation to the city. It was like for every acre, you had to put a minimum of 4 homes on it and a maximum of 9, and we were
Mm.
doing like 5.3 homes per acre.
Okay. So, I
So
mean,
it's like we're minimum density. So when the neighbors came out and they all, of course, everybody came out with any rocks they could pick up off the ground to throw at this project.
yep.
One of the biggest objections was, well, you could just raise the rent on them. And, our response to that was, we can do that in apartments too.
Right.
We can do that anywhere. And I know mobile homes are sticky, but you
Right.
can raise the rents on any community and people can decide to stay or leave. And I know it's more expensive to move a mobile home out of a park. I get that. But, the reality is that we are building something very nice. We're not setting out to build the cheapest mobile home park out there. And then we conveyed that in the hearing.
Right.
We also had to convey that we were local. Hey,
Mm.
we live in this market. We live down the road. We grew up here. We're not some group out of wherever coming
Right.
in and going to ruin this community. We understand this community. We go camping in this community on a regular
Yeah.
basis, right? We go hike here. This is part of who we are. So we're not, so those are all these just little touches that you go through in this development process. But yeah, I mean, and it inspired us to really ask, where we're building self-storages and operating self-storages. Hey, maybe we should go down to City Hall next time and ask them if they'd be open to building something like this. And it's funny how quickly you get told to leave the room. I mean,
Mm.
they're not even interested.
Yeah.
So
Because I was going to
anyway,
ask, if this
yeah,
is wildly successful, would you look to replicate something? I mean, I have to imagine,
yeah.
just
I
given the
mean,
product type, is this something that you'd be looking to expand into other markets? Maybe, I know you're pretty active in Texas. I know Texas in terms of zoning isn't nearly as restrictive as a DC or a Washington or maybe some of the northeastern states as well. But I don't know if the lot rents can justify to go through with the development. So, I mean, what's kind of like the breakdown, do you think, in terms of?
Yeah, you know, people have pitched stuff to me, and you kind of look at what the average cost of housing is, and these you can deliver 200,000 pretty safely with 575 lot rents. You're pretty good. Some markets might be 300 or 200, or some mobile homes might be, some houses might trade for less than 200,000, right? So it doesn't make sense. So there's a lot of markets that are completely eliminated initially from that. And then you got to find
because the comparable housing stock in terms of I've spoken to several of my residents, and a lot of them are just looking at what they're actually paying per month,
Yep.
So
that's all that matters.
It's a comparison. So you're saying, you have to have a relatively high housing cost and somewhat open-minded of a, I guess, city council or county just commission that allows you to even entertain this idea. Otherwise, building a rural park out in the middle of nowhere is never going to make sense financially. You're going to be able to buy below replacement costs all day.
Yep, exactly. And the other thing you want to consider is this isn't the easiest project in the world to finance, because sure, everybody and their brother will finance it when it's stabilized. A little bit of a fewer people will finance it at C of O. But you're going to do $35,000 to $40,000 a pad times 217. So you're asking for $7 to $9 million with some lease up losses, maybe 10 million. Wow. And you're going to stabilize it when? How many units are you going to sell per month? 5 per month. That's like a 3 to 5 year lease up period and a stabilization period. There's not a lot of lenders that are itching to do that deal. So
yeah, that's a great point.
it is. Yeah. So, I mean, even if you can find this project, especially in the COVID environment, good luck financing it. Now we're making headway. Yeah, we're making headway with that, and we have started the project, and we are capitalized to do it. But it's funny because you talk to a lot of brokers, mortgage brokers that are like, or commercial brokers that are like, oh yeah, I can finance this thing all day long, and then they come back with hard money, and it's like,
it's like, dude,
hard money.
12%,
where's this coming from? Right, and you're like, wait a minute, no, I don't want to do 4 and 12. I mean, that's going to murder all my profits. What happened to the conventional guys? Oh, none of them want to talk to you about this, because here's the thing: it's so unique. People don't know what they're looking at.
That's the hard part. That's the hard part about real estate. It's like, if you have a product that everyone wants, but other people, like, unfortunately, certain types of people kind of follow the crowd, and few people will. I mean, would you say? Here's a question. In terms of your investors, the ones who definitely go after self-storage, or ones who may be very open to RV parks, was there maybe a little bit more skepticism around something like this just because it's different, or they jump all in?
The raise was just shy of, well, if you count the family equity and everything, it's about 4.5 million. Okay. And a week, 2 weeks.
Wow.
This filled up and oversubscribed. People get it. People know that affordable housing is a real crisis, and they could see the market study justified what we were doing. And I think those two things let our investors, we have a really sophisticated investor group, and they understand the space, and they understand you can't build these things. Yeah. So a lot of investors, I think, jumped on because they knew that this was a rare thing. A lot of Washington-based investors that just understand the market too, because you got to kind of know Sequim. And everyone's like, oh yeah, that'd be a great retirement community. Oh yeah, my grandma lives there, or she would love to live there, or whatever, So a lot of state of Washington investors, and I think people really understood what we had. I think the lending environment is difficult. I think it's difficult in general. Yeah. But everything's got a catch in real estate. Nothing's ever easy. This. I mean, you're an acquisition.
There's some road bump, regardless of how like down the fairway this deal looks. Something's gonna come, and a grizzly bear's gonna come out of the woods and just catch you somehow.
We've seen it all too. We've had tornadoes hit properties. We've had properties catch on fire. We've had properties flood. Nothing surprises me. There isn't anything that, I always ask people when they're getting into real estate and they're trying to get me to invest with them or something. And I'm like, what has gone wrong? And they're like, oh, nothing. I'm like, okay, well, get back to me when you
Talk to me in about 3 years when you
Yeah.
actually have some wounds and
Right.
your eyes are a little bit more glossed over because you're just like, this is just the way I live.
Yeah.
Which I find funny because a lot of people say real estate's passive, even in manufactured housing. And I just laugh because the other day,
This is a very active project.
Yeah. Well, especially for you all. You
Yeah.
all are active on like probably a daily basis trying to manage the day-to-day changes of that. You have timelines to hit. So this will deliver next summer, but you expect to be stabilized in
42 months.
42 months?
Yep.
Okay.
42 months from today.
Okay. So the early 2024.
Yep.
Did I do that math right? Not quite.
Yeah. It could be faster.
Yeah.
But we want to be conservative.
And how do you market that?
We've already got reservations.
Wow. And how do you market
we're not even
that?
advertising. We don't even have a website right now. We're designing it. We're going through a branding agency. We're really getting a squared away brand. Like the monument sign matches all the interior signs, the logo, the style guide. Everything's got to make sense, right? But we've already got reservations just from people hearing about this park coming. We've already got people from out of state making reservations in this park. So we do have quite a bit of demand for it. The other thing is the major manufacturers of these mobile homes, manufactured homes, they have more people that want to buy homes than they have places to put homes. You probably experienced this.
Yep.
So, that's a big outlet for us to get business is, we tell them, hey, we have a park, we have 217 lots available. And then they say, well, we have buyers and they want to put these homes somewhere. And, they want to put a home in your community. So then it helps them sell their home and it helps us get a tenant. And, that's kind of nice, right?
Yeah, that's a nice trade-off there. Unless, that's probably a nice working relationship to have. And I have to assume once the word is out, I've learned as much as we do, a lot of branding, once word of mouth hits and people know, it's game over. It doesn't take much.
Referral. Yeah.
And so once you have that branding, and I'm sure hitting all the avenues correctly.
So my point was, while we do pro forma 5 a month, we probably will come out of the gate with, 20 to 25 pre-sold homes. And we also we're going to buy about 10 homes, and get them out there, get them on the lots, so when somebody's in town and they walk into our office and, oh, we want to customize it. We want to order all this and that. And they're like driving away that weekend. And then they go, yeah, let's just buy that one on lot 3, let's just move in, we don't need it. We don't want to do all that, So we will have some model homes, that will sell. So
throughout the community. Okay.
Yeah.
And there's no government assistance at all in this project. This is fully which another reason why I love this space so much, just because it's like the real market's at play.
It's the real market, and it's real Main Street investors doing Main Street deals, providing affordable housing. What else, and there's supposed to be a pretty nice profit. So, projected.
What are projected returns kind of on something like this over what I guess that'd be a 6.5 or
5. It's a 5-year deal for our investors.
Okay.
I don't know. Am I allowed to talk about this? I don't know.
If not, usually, it's not a big deal.
Yeah. Usually it's like 2x over 5 years. Yeah. Okay. I think this one's a little bit more than that, but yeah.
It's usually 2x your initial capital that you're putting in, you're saying? Okay.
Yeah. Yep. What was that, 20% per year or something like that?
Right. Which is in today's world of zero interest rates.
Right. That's all projected. Timelines can stretch. Lease up can go slower. There's no guarantee. You can lose your money, right? I always tell people that. So this is a real thing, right? You're investing your money. I don't think that would ever happen, but before we talk about all the upside, let's talk about some of the negatives too, right? So
yeah, right. Which is why you have to be accredited and you have to have some sort of understanding of kind of risk associated with the private private investments, you can't take it out, you can't panic, like
Yep.
there's some things you have to just come to grips with when you're in a real estate syndication, that just, I guess, someone from the group mentioned, and I'm not sure, I guess COAH requirements. I guess, is there a portion of this community that has to be a certain amount of affordable, or since it's so I mean, it
No.
seems like it's like you're almost like 100% there, but
Yeah. No. There's no restrictions.
got it. Wow. So this is
No rent restrictions. No, but we have no intention of jacking rents or anything. This is going to be locally owned for a long time, and but no restrictions, no rent control or anything like that.
got it.
Yep.
Well, hopefully, if those private roads get resolved, you might be back. They might be around too. I mean, if anyone is in the world's going to do it, it's probably the people who just successfully.
Yeah.
Got
This
that
will be
done.
a fun I mean, this is going to be, probably one of the most rewarding projects we do in a while. So
I hope you all document this. I say this now that I'm relatively, I guess, more public on social media. One thing
Yeah.
I've realized is just I hope you all, which sounds like you already are with the branding firm and everything, but please keep us all updated. I mean, just for advocates of this space and a lot of people I speak to, this is exciting for all of us, right?
Yeah, copy ideas and I always say imitation is the best form of flattery. So, however we brand, I mean, I'll continue to post, and I'll continue to put out videos, get some drone footage of doing the masquerade and some of the houses coming down. I've already posted about that.
Cool.
Yeah. So, I'll definitely keep a sort of a social media journal of what's happening. So
Yeah, it's definitely a great thing, and as you know, you build up steam in a lot of people you never knew was even a part of it. I mean, I was a great example. I reached out to you for
yeah, no, I appreciate
something
yeah.
I heard from 4 months ago, and I was like, what, this would be really fascinating,
Yeah.
to learn more about. I want to says so. Coronavirus, has it sidelined anything that you have all done, or is it kind of you've been kind of so far in
The
down the
financing,
track?
a lot of banks closed up.
Yep, we
That
noticed
was
that too.
difficult. The city the city of Sequim did an excellent job during COVID.
It's great to hear.
They had Zoom meetings. They have worked with us. No complaints. Things did stop. The governor, did a shelter in place, and people couldn't go out, and it stopped construction for a while. But for the most part, it didn't really. We were kind of already in permitting anyway, because even though we had the binding site plan, we still have to get the permits. The grading permits and a little bit of vertical permits with the clubhouse. But
So
really, I mean, yeah.
just like a big overview, could you kind of just talk about kind of just like a quick timeline of the things that you're going through to get to maybe stabilization? Just maybe just a general, just so someone has an idea, maybe if they're not super educated on the development game.
You have to get site plan approval. On all site plan approval, I'm just going to dumb this way down. Site plan approval is like, your property can be something. And here's some general conditions. You have to do off-street improvements. Off-street improvements are, you have to build the sidewalk that perimeters your property that's on public property, right? You have to, this is how many you're approved for, how many homes you're approved for, right? These are the streets and the general layout, right? That's site plan approval. Getting a binding site plan approval, which means that it's binding, you're vested, this is approved. That's difficult. That's the part that took the longest. That's the entitlement portion of this project. Within binding site plan approval, imagine it's a big umbrella, and underneath binding site plan, you have all types of requirements. Your phase 1 environmental has to come back well, right? Your geotech that tests the soils has to come back well. You have to clear the property of any critical areas in Washington. That means wetlands, streams, former wildlife areas, whatever it might be. You have to have that cleared. And there's multiple jurisdictions that have to weigh in on your project. Department of Ecology, a biologist, sometimes the U.S. Army Corps of Engineers. So under binding site plan approval, there's a ton of things that just check. There's probably 35 different things we had to get signed off on. Utilities, fire, the irrigation channel has to be, there was, in Sequim, it's cool. Mountain water comes off the mountains. They made man-made irrigation channels and they open them so people can water their lawns and that's a thing, right? And we have an irrigation channel that's public use that goes through our property that serves the downstream properties.
Cool.
Yeah, so we had to get that approved to move. There's tribal impacts in the area. The Sklallam tribe is in Sequim, and they had to weigh in on the project. They had to give it their blessing, and they did. So we had to get all these things, and then once all that binding site plan checklist has been completed, then you have the city will deem as a completed application. And once you have a completed application, then the city will review it, and then they'll make a recommendation to the planning committee. And the planning committee will then say, your binding site plan is approved. And once you have that approved, then you go to city council. And every jurisdiction is a little different. And there's multiple public hearings. In this case, there's multiple public hearings. Like I said, every county has a different process for site plan approval. Then it went to the council denied it. Then they revoted, they approved it. We're off to the races. Now you have binding site plan approval. So now you're just dealing with the guy at the desk at the county. You're not dealing with the council anymore, or the city planning or anything like that. So now you need to get your actual permits to do the project. So your electrical permit, your plumbing permit, your mechanical permit, your building permit, right? Your mass grade, your public works permit. Your public works permit is like to do the grading and the stormwater detention, right? How are you going to manage stormwater on your site? Things like that. But that's a code compliance issue, not an approval issue. So a lot less risk after you get binding site plan, because everybody's weighed in, and now you're just going for those individual permits. Does that make sense?
Yeah, like when the site plan and it's almost like tentacles coming down of that site plan to then get that dual approval. You're saying it's more just kind of carrying out those orders. There's no other like approval. It's just more of kind of getting the permits needed and the other, I guess, necessary paperwork needed to just kind of go forth with that project. There's not, negotiations as much. It's just a matter of, I guess, following the code to get the project delivered. And
sometimes site plan approval comes with conditions that you have to be met before you can proceed with the permitting process. So it's the city's way of saying, we want to see this first, then you can do that. This got approved without conditions, which is amazing. Wow. So now we had to follow what we set to do, but there was no additional conditions put on the property. Now, I've been in jurisdictions where I've gotten self-storage developments entitled that come with all kinds of conditions. Like you have to go to the U.S. Army Corps of Engineers and get a Section 404 wetland mitigation permit. You have to get DOE approval. You have to do this, you have to do that, right? So we have I think there's 8 conditions on our site plan approval for we're building 755 storage units outside of Seattle right now.
Wow.
And there was a handful of conditions on there. Some of them that took a year to satisfy, a year and a half to satisfy. So just through other jurisdictions giving you their blessing, right? So this one didn't
don't have more gray hair. That sounds like I was like gonna say you're doing pretty well. You're doing quite well.
Yeah.
That is quite impressive. I didn't realize
it's work, and and nobody wants I just you watch the presidential debates and I just laugh they I'm gonna make affordable housing and and I'm just like, you don't understand you don't have a clue at how this all works. I mean, I'm on the streets, trying to get this stuff approved.
It's totally different from just from a pulpit, isn't it? Yeah.
That's why like wetlands, the Clean Water Act of 2015, it took wetlands that were connected in the United States and it made every impression of water in the ground that was connected to another impression of water in the ground, a dent in the ground that had water. Nationwide waters of the U.S. And so that went to the Army Corps' jurisdiction. That was completely not set up to deal with the influx of application reviews they were going to have. So I got
huge backlog.
Yeah, huge backlog. Yeah, so I it's what's funny is that project I actually went to my congressperson about and said, hey, you haven't staffed the Army Corps adequately to get my permit through. And they actually called Washington, D.C., and got someone to call the Army Corps and get my permit through.
Wow.
because, a lot of these, so that's why like a lot of these things that we're doing, it's like on one hand, you're conceivably saving the environment, but you're really not, because my wetland mitigation plan was actually making a low quality wetland and recreating it into a wetland that was twice the size and twice the high quality functionality.
Mm.
So a lot of times, these rules, they're spun as to be all the Clean Water Act of 2015. It's like, ooh, that sounds really,
I'm
wow.
all for it, right? Like,
Right. You're all
just
for
the
it. Why wouldn't you
headline,
be for
I'd
that,
love
right?
it. Yeah.
Yeah, but then when you look at the application of it, it's like you're restricting somebody from providing housing and improving the environment, and through needless and endless paperwork. And it's like it's ridiculous.
Right.
So I think that if we really want to solve this problem, it has to start from the top, and really it really has to get into, I always joke, there's not 3 branches of government, there's actually 4, and the 4th is the most powerful, and that's the bureaucrat, because they stand between you and your permit.
It's coming from a developer for sure.
Right. I mean, it's no, because think about it. I mean, I don't blame them. They're just doing their job, and they look at me like I'm some, guy on a yacht in Miami. I'm just a normal guy just doing a
Yeah.
deal. Right. So, I mean, I'm not, so anyway, not to get into it,
Yeah,
but
I
there's a lot
totally,
that goes into
mean,
this stuff.
I'm
Yeah.
with you. I mean, there's some days it took us 3 months just to move in a home to one of our communities, and we bought the home 3 months prior, and we had nowhere to put it. And it's like, I'm just trying to move a mobile, mobile
Right. I'm
home.
just trying to provide a
What,
housing unit for
like,
somebody.
yeah, I
Right.
just
Yeah.
like, why did you not return 20 of my calls? I would like to, I'd like to know. And I'm sure I'm sure you have stories for days, but
Days. Yeah.
we're
Yeah.
we're kind of coming to a close here, and I just wanted to give you an opportunity. You
Sure.
all are doing we focus a lot on the manufactured housing community that you're creating in Sequim, but you do a lot more than that. And so I'd love to give you, our platform and just our viewers who I think would be very interested. You obviously have a unique skill set within the people that we discuss. They might be interested in working with you, or maybe they have opportunities that might make sense for you. So kind of maybe give a little broader context of kind of what you guys are looking for, maybe if you're raising funds, or if you kind of where you're at in your, I guess, process. What's something that you are currently looking for, or just maybe
Yeah.
project looking to take on?
Yeah, the easiest way to get on our depending on when this airs and when people see this, the easiest way to get on our distribution, because we're always looking for more investors, is to go to Spartan-investors.com.
I'll put it in the show notes.
Yeah, you just click invest now, and that'll get you on our list. We are actively raising for and I can say this because we're doing a 506c, which is kind of
cool.
fun.
Great.
Yeah, so we're doing accredited investors. We're buying a 4 storage portfolio in Tyler and Longview, Texas.
Great.
And it's stabilized, 90% plus occupied, cash flow day one projected. And it's got like a 39% break even occupancy. Very stable property with the opportunity to add on to one of the storage facilities. And we're going to reposition the properties for value add. So that's an active raise. We're almost done with the raise, but that one is a deal we're funding for. And if you want the prospectus or the offering memorandum on that, my email is ryan@spartan-investors.com. So
cool. Yeah, we'll make sure to get that in the show notes as well, and distribute that for others to reach out and contact you. Well, I
appreciate that. Yeah.
I really, yeah, absolutely. And if, as we connect with a lot of different people, so if there's anyone who I can connect you with, I will definitely pass them along if they're of interest to you. I'll kind of make that introduction, but let me, we'll end this show for now, but I thank you so much for coming on. You had such a unique story. You're like one of 6 people in the world doing something, which is kind of weird to think about, isn't it? One of 6
weird.
people
Yeah.
in the world developing a manufactured housing community, and you can say that you are doing that, which is a pretty impressive feat nonetheless. And thank you for sharing so much knowledge with us today.
You're welcome.
And looking forward to staying in contact.
Thank you.